But let's address how the China comeback is impacting businesses and whether the Western geography, especially the Europe slowdown, is also turning out to be a bit of a spoiled spot. We have with us Hiren Doshi from Rolex Rings joining in to help us understand how it's been impacting their business. Considering Hiren, hi morning. Firstly, welcome to ET Now. Lot of moving parts, Hiren, for your business. But let me start off with the fact that 60% of your revenue is actually coming in from exports to the Europe, geography, wherein the exposure is currently at 25 to 27%. Tell me, with global headwinds, is there a slowdown that you're seeing in your global orders?
Yeah, very good morning, ma'am. See, we do not face any kind of slowdown, particularly from the US market. No, there are certain, ups and down or some kind of slowdown from the couple of European customers. But at the same time, the new customers have been added from that territory only. So we are having, the same kind of growth and as well as the contribution from the overseas market. And we expect more diverting from our customers, the way they have conversed us, from a particular country, from a particular continent, the way they have sourced there, it shows a little discomfort to them, and that is why they are diverting, or rather they are diverting the program, their inquiries to the Indian market.
Okay, that's quite interesting. But tell me, to try and be able to hedge yourself, are you also looking at newer geographies to try and reduce the dependence on Europe?
Yes, definitely. We are also trying, the certain pockets of North America where we didn't have presence as of now. And still, we do have good potential in terms of our bearing rings and the auto components. And again, auto components in the use to be used for the electric vehicles. So there we do have scope in US and European market both, and we have already started working on that, and the things are moving quite positively. It would be added further to our growth.
Fair enough, Mr. Doshi. Good morning. Now, China plus one as well was an important trigger for the company. With China now making a comeback, what is the impact going to be on your business?
See, what we have been conversed by our customers who have their, multi-locational plant globally presence. They are, as I was mentioning, that there are certain discomfort, and particularly in terms of pricing, the way the cost of production increase in that particular region or in that particular country. That is why they are just diverting their new programs, new inquiries to the India-like countries. So definitely there would be a good opportunity for the suppliers, Indian auto ancillaries, as well as bearing manufacturers to compete with China. And we expect that it would be a win-win situation for India.
Worried now that China is returning back and that could potentially impact business from home?
Not much. We do not envisage much. Definitely, China has started, but as even the domestic auto ancillaries bearing manufacturers, such industries have just instigated their expansion plans, and they have, India is being considered as an import substitute. So there would be a good amount of export and to the US and European countries and certain other Western countries. So I don't think there would be a threat, or you can say, but there would be definitely competition, but India is having better scope.
So, okay, fair enough. So you're not worried as of now with China making a comeback. But, talking about the domestic business, has the commodity price rise or any supply side issues, intensifying competition impacted business in any way? And if so, how are you looking to allay these concerns?
See, commodity price, particularly for last 2 to 3 months, it has been a bit stable and having a bit slowdown, particularly the kind of commodity what we use. And we do not foresee any kind of changes because we have a pass-through mechanism with all our customers, whether it is overseas or domestic.
Okay. The other thing that I wanted to talk about, Hiren, was also also the fact that you derive only 5% of your revenues from EVs at the moment. How is it that EV and hybrid segment for you is going to shape up, say, in the next 5 years? And is it obvious that you are going to see a larger contribution from EVs?
Definitely, the segment EV is gradually increasing, but there are certain challenges in terms of distribution, in terms of the expanding the market and the cost of ownership. But at the same time, we are just well equipped to produce many more kind of EV components. And as you better know, that we are not only into the particular automobile industry. We do not dependent on the particular automobile segment, as we do have versatile base, and we are also there into the commercial vehicle, to the industrial applications, to the railways, and off-highway vehicles. So there we do have a good scope, but at the same time, our concentration to develop EV components is definitely there, and gradually we are expanding. As we have started with the US, now we are going to supply the EV components to the couple of our customers having plant based at Europe.
Right. You know, analysts, Hiren, right now are seeing a 20% growth for you for the entire fiscal and about 15 to 18% for FY24. Is this a realistic estimate?
As of now, definitely. You must have seen our first half number, having almost top growth of 20% on top line compared to the same corresponding period of previous fiscal. And again, the bottom line has sharply increased by almost 50%. Definitely, the third quarter, it is more or less what we had in the earlier 2 quarters, but the last quarter of the current fiscal, we expect better numbers, and we would be touching near to what we have estimated, and we'll be able to achieve it. And for FY24, yes, we envisage growth more than 15%.
What's your current order book and what's the order inflow guidance?
Current order book is somewhere about 120, 130 crores per month kind of thing, and definitely that sort of forecasting or that sort of schedule is there for next 3 to 4 months. And same we expect to be, and a couple of new customers will be gradually started their supply in the last quarter of the current fiscal.
And given that your bearings rings customers are undergoing major expansion programs, are you going to increase capacity? And I'm just wondering if you're receiving any inquiries or orders from the railway space for railway bearing rings?
Yes, definitely. We are supplying to a couple of domestic players as well as in European continent, where in turn they are supplied to Indian Railways as well as German Railways. So we are getting regular momentum from them. And as far as capex is concerned, we have certain spare capacity available. Definitely down the line, 12 to 18 months, we do not have any capex plan, but we have already started to draw a kind of capex may be required down the line 18 months, 24 months onwards. And a certain value-added process capex is definitely, it is a kind of continuous capex plan.
Appreciate your time. Thanks very much for giving us clarity on a number of issues regarding your European contribution, the China +1 factor, as well as your capacity expansion plans.